Realty Income is known really well by dividend investors. Many will hold Realty Income, or known by its ticker symbol of O, in their portfolios. Over the next few minutes is just take you through some of my thoughts about Realty Income and why I actually hold it within my portfolio. Welcome back to the channel, and if you're new here, hi, I'm Mark of Desperately Seeking Fi. How does Realty Income achieve this monthly dividend trademark? They do this through a number of different ways, but as we see here, it's through high quality real estate. They have a conservative capital structure, prudent growth strategy, and corporate responsibility at the heart of the company, looking to have long-term leases with over 12,000 properties within the portfolio across 84 separate industries. And that runs across the whole of the US, Puerto Rico, UK, Spain, and also Italy. And cash flows are generated from this, and that is one of the reasons why people love having Realty Income within their portfolios. Another strength of Realty Income is the diversification that they have within their portfolio. And just look at this, they have over 12,000 commercial properties under long-term or net lease agreements with a 99% portfolio occupancy. Who wouldn't want that as a landlord? And they have diversification in their client base with over 1,200 clients across 84 different industries. You can see how the size and structure of this company does just keep allowing them to churn that monthly dividend. As they have trademarked themselves, they are the monthly dividend company, and they have a dividend just coming in around that 5% mark. Also, they have shown that they have paid consistently, or that they have increased their dividend consistently over the past number of years. And how many years is that? 26 years of growth, which makes them a dividend aristocrat, going back the whole way back to 1996, showing nice steady growth that even in the financial crisis around 2008-2009 they still maintained, and even during COVID they continued to maintain their dividend payments and then started to grow after that. The price of Realty Income, if we look over that time period as well, steady growth with a few dips, and we sort of see that dip in share price during the financial crash of 2008. What we can see over a shorter time period of 5 years is that we got up to a peak just before COVID in February 2020, and that was coming in at just under $80 per share. That dropped away to nearly half that because nobody knew what was going to be going on during that COVID period. We started to get back up towards that level back in the summer of last year, but we did see that big drop off in October, rally that we saw in January time, but what we have seen is a dropping off of that over the past few weeks. And actually, does this price give us a potential in to get this company at a good price? If you're getting value from this kind of content, I'd love it if you could hit the like button and think of subscribing. I've got a quick question for you. Are you invested into Realty Income as an individual stock? So using Simply Wall Street as one of my tools that I use to look at different stocks, we can see that they are predicting Realty Income is trading at 37.9 below a fair value. Which possibly means that there is some value in this company and it is coming out lower than we expect it to be. If we look at where it was at that top, up around that $80 mark, we are down in around the 61. So we are looking at that. If it was just to get back up to its peaks, we'd be seeing another $19 going on to that price. So looking at where fair value is, you have analysts estimating that that will be somewhere in the region of that $100 mark. Forecasted annual earnings growth looking at about 7.7%, and that's reasonably good. Potentially slightly lower than some of the comparators that Realty Income are competing against, but I'd still be relatively happy with that 7.7 annual growth earnings. On the dividend side of things, and this I suppose is where people really love this company, the monthly dividend payer, currently in around that 5% of dividend yield and running at a 73% payout ratio. Some of the comparator companies are actually only paying out approximately 65%, so they have got more money to actually invest into more real estate and grow their portfolios. Where Realty Income is slightly held back is it is such a large company. If we look at the different industries that they are invested into, you see lots in grocery, convenience and dollar stores. You also have those McDonald's, KFC type of restaurants, so the quick service ones. You then also have your drugstores, and you also have sort of health and fitness with companies like LA Fitness. Growth is actually looking quite good as well for Realty Income. If we just look back historically, by the end of 2012 they had about $6 billion worth of total undepreciated real estate, and then today they have almost $43 billion worth, and in the last year they've actually added 6.7 billion. So quite a lot of large growth at that stage. One of the issues that they do have is how much can they actually raise their rent hikes. If you look at the kind of companies that they are dealing with, they are large companies who really do have quite tight profit lines. So your Walmarts, your Costco's, your Tesco's, Amazon's aren't going to be up for large increases in their rate hikes. So I think it is part of the business model where they potentially will struggle a little bit in growth when you have their competitors being able to increase at a larger rate. I believe it's somewhere in around 0.9% for rate hikes for Realty Income, whereas competitors are managing to draw in 1.5 to 2% of rent hikes. If you're interested in seeing what simply Wall Street can actually do to help you make some of your investment decisions and assist with your due diligence, have a look down below where I've got a link to it where you can have a 14-day trial and see what you think of the platform. Realty Income did actually move over the last month. It has been down, as we saw earlier on, and in reality we have also seen over the last few trading days we have seen it go down by minus 1.7 and then a further drop across the whole real estate investment trust, being down almost 4%. This potentially provides us with an opportunity to grab a bargain. But what I would suggest is, before making any investment decisions, do your own due diligence and research into the company. I will continue to invest into Realty Income because I like to see that steady monthly dividend income coming in, and it just inspires me to continue on this journey. Why don't you have a quick look at this video that I've done on REITs, and I'll see you in the next one. Thanks very much.